Hello everyone. Welcome back to Wealth Maama. Today's market quietly tested something important before deciding its direction. On the surface it looks like a small up day, but underneath there were clear signs of rotation, short covering and selective strength. If you watch the next 2 minutes closely, you'll see the exact clues that decide whether tomorrow will be a breakout or a breath, and why that matters more than the headline number. Nifty closed almost unchanged at 26,215.55 after a narrow intraday swing, opening at 26,261.25, making an intraday high near 26,310.45 and hitting a low of 26,141.90. What's interesting about today is how the index behaved around the early highs. Buyers pushed it up into the 26,300s with conviction in the morning. The market then paused and pulled back through the afternoon, and finally it recovered to finish marginally above the most important intraday pivot. That shape, early conviction, midday pause, late recovery, tells us that both buyers and sellers are testing conviction levels, and that control is still being negotiated rather than handed to one side decisively. Why did Nifty rally? Global conditions provided a quiet but constructive backdrop today. Overnight cues were steady and risk sentiment remained neutral, which removed a major source of volatility and allowed domestic flows to decide the day. At home, strong interest in financials and selective buying in consumption and metals supported the market while a handful of large names corrected, creating a mixed heat map. There was no single big news event driving the tape. Instead, the session reflected short covering and rotation into high beta and quality financial names, a pattern you often see when traders are positioning ahead of an upcoming event or data release. Market psychology and what changed today? The psychology today was cautious optimism. Traders initially stepped in with conviction, pushing the index into the 26,300s, but then paused to digest the move which created that midday retraction. The late recovery suggests that buyers were unwilling to let the day finish weak. They re-entered and lifted prices back to the day's upper band. When you see this kind of behavior, it means the market has interest in moving higher, but is still watching for confirmation, its readiness without full commitment. That sets up a classic decision session for tomorrow where either the confirmation comes or the market breathes. Sector-wise performance. WHO helped and WHO held back. The market was very selective today. Financials carried much of the weight with Bajaj Finance, ICICI Bank and Shriram Finance showing notable strength, while FMCG names like Hindustan Unilever also added a steady hand. On the flip side, several sectors showed pressure. Autos and some pockets of healthcare and consumer durable names underperformed, with marquee names such as Maruti and Eicher showing weakness. The result is a mixed heat map where leadership is concentrated in financials and a few cyclical names, and broader participation remains moderate. This selective leadership is constructive if it broadens tomorrow. It's cautionary if it narrows further. Top gainers. What stocks drew buyers? Bajaj Finance led the upside after a strong session where long accumulation appeared visible. ICICI Bank followed with solid volume and buying interest, and Shriram Finance also attracted demand as traders rotated into financing and NBFC exposure. Hindustan Unilever's steady performance highlighted risk-off quality buying, and Bajaj Finserv rounded out the list as the market rewarded financial names that have been forming bases over recent sessions. These names didn't spike on random headlines. They moved because flows rotated into high-quality financial exposure. Top losers. Rotation and profit booking. On the weaker side, Adani Enterprises and Eicher Motors were notable decliners, with Adani falling sharply as short-term profit-taking resumed and Eicher correcting after a prior run. Eternal, ONGC and Maruti also closed in negative territory after intraday weakness. These moves appear more like rotation and headline-free profit booking rather than fresh negative fundamentals. Still, when large names drop, they can weigh on market breadth and keep the index from running freely. India VIX ended the session lower at 11.78, down about 1.5% after an intraday low near 11.51. The fall in VIX while Nifty traded in a narrow range is important, Falling volatility with a flat to positive index suggests the market is growing more comfortable and that premium sellers are more willing to step in. In plain terms, fear in the market reduced today. Lower VIX supports orderly rallies and reduces the probability of a panic drop. It doesn't guarantee a breakout, but it does increase the chance of a steady breakout if the right levels are taken out tomorrow. Support and resistance, levels that matter. Today's price action gives us clear technical reference points. Immediate support can be seen around 26,135, the level that held today's mid-session weakness, and below that the deeper cushion sits near 26,050 where longer-term buyers are likely to defend. On the upside, the first clear resistance is the 26,300 area which acted as the morning test zone and needs to be taken decisively for bullish momentum to return. Above that, a break and hold above 26,390 would open room for a more confident leg higher. These levels frame tomorrow's battle between buyers and sellers, so watch them closely at the open. Now let's talk about tomorrow, because the way today closed sets up a high-stakes decision. If Nifty can trade and hold above the 26,300 area in the early session, we are likely to see momentum pick up quickly as short covering and algorithmic flows join the move, and the index can test the 26,390 to 26,450 zone in relatively short order. That scenario would confirm the selective strength we saw today and turn the cautious optimism into a cleaner uptrend. On the other hand, if Nifty fails to sustain above 26,300 and slips back below 26,135, the market is likely to breathe and probe lower, testing 26,050. Such a pullback would still be healthy unless it becomes prolonged. In short, tomorrow is a trigger day. A hold and follow-through above the morning resistance will likely accelerate gains, while a failure to take that trigger will force the market to consolidate and look for a better base. Either outcome will create a clear tradable path, so watch 26,300 as the decisive marker at the open. So that's the picture for today. Selective strength, easing volatility, and a clear decision point to watch. Tomorrow will tell us whether this selective buying broadens into a consistent market advance or whether the market prefers another calm consolidation. If this analysis helped you see the patterns behind the numbers, hit like and subscribe so you don't miss tomorrow's live breakdown. Also share with your friends, because when 26,300 gets tested, the next few candles will tell the story. This is Wealth Maama. See you tomorrow. We uncover the next clue.